On then, and I think today it's going to be quite crucial because there's a lot of news flow on the Adani group, and the markets will make up its mind whether or not the Adani issue is past it and whether it's prepared to move on. I think we'll get the answer to that today. If the markets can hold on or move higher, then that will give you some evidence that maybe the market is ready to put the group worries behind them and move on. For the time being, let's focus on a couple of Adani Group stocks on the cement pack. We have Naveen Sahadev, director at Nuvuma Institutional Equities, who joins us to discuss about all the news flow in the cement space. Hi, Naveen. Good morning. Good to speak to you, Naveen. And we've got, three pockets that we want to talk about. One is on the ACC Ambuja Group. Then, in fact, we want to talk about the GST, as well as, finally, your picks from the sector. So let's start off first about the group call yesterday. Ambuja's con call, I managed to get a sneak peek into it as well. And the management, they clarified on a whole host of issues. The question is, are you convinced with their answers? And what will your view be on the stock post this big correction that we've seen?
So operationally, both ACC and Ambuja, I think, have given a remarkable performance. In just a span of a quarter, they have managed to reduce the freight cost segment significantly. All the things which initially we were like, or the street was ascribing to once these two companies come under the fold of Adani, be it the volume momentum, be it the cost rationalization across. It's not just fuel or logistics. In fact, on the earnings call, the management said that there's no stopping here. They are looking to further intensify the efficiency enhancement measures. So it definitely did throw up a positive surprise both at ACC and Ambuja. I think operationally they really have a lot of headroom to improvise further. And in fact, they also reiterated that the plans to double capacity in 5 years remains very much. In fact, details of that will be shared next earnings call.
So what is your view on the stock now? With a long-term horizon, do you think the stocks ACC and Ambuja become good buys at this price? Is the risk-reward favorable?
So definitely there is value in these stocks if you were to take a slightly longish view, because consistent volume growth and a combination of huge cost rationalization is not something that you are having many options on the, at least in the cement space as such. So definitely, having seen the kind of correction we already have, definitely there is value on the stock, despite assuming lower valuation multiples. Also, I'm sure there is value to be seen from a 1 year or a medium to long term perspective.
Okay, but Naveen, let's turn the question around. Everyone was talking about re-rating of both these two stocks. But now, since the group is in, a bit of a tizzy, would it be better to go with the big boy out there, UltraTech Cement, large capacity, volumes will come out there, cost saving for the industry as well, and the market leader? Or what's your choice between the toss-up between both these two?
So let's put it this way. If Adani as a group continues to focus on volume maximization, as in huge capacity growth, the kind they are talking, there are other large companies, be it Dalmia or other companies like Shree, who are also focusing on giving huge capacity targets, 3 year, be it 3 years, 5 years. So in that kind of environment, overall cement space per se, the demand supply is not going to be very balanced. That's point number one. And as we speak, the industry is really feeling the heat of weak cement prices. As such, it's even safe to say that the industry does not have any pricing power demonstrated in the last several quarters. So in that light, I don't see UltraTech to be a really a great option. Of course, it's a great company, but from the overall sector perspective, I still think there is caution to be advised. Purely from the weak pricing power. Demand, everybody is convinced cost is going down, but commodity business, you need pricing power. There's no pricing power.
Okay, there is a possibility that the GST rate on cement could be reviewed, and it could be cut from 28% to 18%. At least that is what the expectation is. If it comes through, then what would the effect be?
See, of course, we have heard this in the past as well, right? That government is looking to rationalize the GST on cement, and there are numbers floating around from 28, it could go to 18% or so. Sentimentally positive for sure. Of course, you have to pass it on. but it's definitely sentimentally positive, because even if, like, there is a marginal sort of an increase also on the realization in the transition phase, it could still be very positive for the overall sector. So definitely sentimentally positive for the sector if it goes down.
Okay, all right. We will leave it at that. Thanks a lot for joining in and giving us a quick